Discuss the major themes affecting markets right now. I am joined by Rebecca Walser, president of Walser Wealth Management, and thank you so much for your time. Hello to you.
Hello,
what do you make of the action we're seeing as far as the markets today?
I mean, I feel like it's frothy, and it should be expected to be frothy. We've had a lot of things that have happened in October, from almost a direct trade war that kind of sent crypto into a frenzy, triggered a lot of sell-offs, a lot of liquidation, to that recovering to hitting gold parabolically 4,300, coming back down still in the 4,000 range. So there's a lot that's been happening, and I think investors need to be prepared. Like this is to be expected, especially in the middle of a shutdown, in the middle of a tariff implementation policy, and in the middle of the fourth industrial revolution. Like, we should be expecting things to not be just straight up and to the right.
Oh, absolutely. I mean, it's a bit of a seesaw action there, definitely giving us a bit of whiplash as far as you say, some of the moves in not just equities, but other asset classes as well. You mentioned gold. How are you looking at the government shutdown? Because, I mean, we're at day, what is it now, 22 or something like that. I just look at my watch because I know it started on the first day of the month.
Exactly.
So it always tells me the truth. So
exactly.
How are you looking at it? Because this has been something that's kind of been just happening in the background. Everyone's sort of keeping an eye on, but the markets have largely looked past.
Yeah, and I think they will. I mean, they did have to recall some of the BLS staff to get the CPI data for Q3 because that has to be over to the Social Security Administration so they can make the COLA adjustment announcement on November 1st. So we do have some staff coming back in for that. We will get that CPI data on this Friday, the 24th. But otherwise, it seems to be right now not much of an impact other than Trump trying to let go of 4,000 federal workers, and he's sending emails that they're not getting because they're not checking their work emails. And a judge temporarily stopped that last week. There's an injunction against it, so we'll see that'll go up to the appellate level, and we'll see how that goes. But right now, it looks like the administration will try to use that to do some federal staff reductions, and that could help the budget. But a lot. You're talking about we need massive reductions to get our budget to not be at deficit level, almost pandemic and wartime spending, and that's where we're at. And so we have to ask ourselves, what's going to make this budget come back down?
What are you making of the moves that we've seen in crypto? I mean, if you take a look at Bitcoin right now, as we've been saying, it's below that 110 level. I mean, we had a guest on the other day who was sort of thinking that this could go to sort of like 200 by the end of the year, just on a lot of the tailwinds that have got us to this point. But what's been happening with regards to the price action just in recent sessions?
So we had on 1010, I think is the biggest thing. We had the largest liquidation that we've really seen to date. And that was really brought about by China going real protectionist on rare earth minerals. And Trump retaliating and saying we're going to do a new 100% tariff. Well, what happened was the market obviously completely said, oh my gosh, came straight down. Well, the prices coming straight down like that on cryptocurrencies that we haven't seen that fast triggered a lot of sell-offs because of leveraged positions.
Right.
And so when you look at a traditional cryptocurrency investor, they might look at that and say, oh my gosh, Bitcoin is real volatile, 126 to 102. I can't afford that kind of swing. But it wasn't germane to just cryptocurrencies. It was literally across. I mean, that's also why gold went parabolic, right? People thought, let me race to safety. We've got a direct trade war between the two largest economies in the world. Let me fly to safety. So you saw fleet to gold, you saw liquidations of crypto, and that is just a reaction to this is not safe as I thought it was. Let me go to the safe hard asset.
Okay. And just as far as the rotation that we're seeing, I mean, obviously you just mentioned the price of gold. That's been a big focus of the market. But also we've seen some of the steam and some of the air coming out of tech. We've seen a bit of a move into some of the defensive plays today, but there's been a lot of talk about the sort of froth coming out of this market right now, a lot of talk about AI bubbles and sort of stretch valuations, and we're seeing it sort of across the board. What is that telling you right now?
I mean, unfortunately, there is a little bit of real meat behind the idea of an AI bubble. And it's simply because if you look at all of the deals, and like we were talking earlier, the Wall Street Journal has a great article of the amount.
It looks like a washing machine.
Exactly. Yeah. It's like, OpenAI to, AMD to NVIDIA to Oracle. I mean, where's this money? If you look at Oracle, their debt to leverage ratio is way too high. They don't have the cash. They're going to have to raise debt or equity to do the investment they're actually talking about doing with AMD chips. And so there is a little bit of a frothy bubble. We just can't have hyperscalers investing in other big scalers, and that's the all. It has to get monetized and it has to be distributed broadband to the retail investor that's actually leveraging it in order to make these valuations actually realizable. And the bigger issue with that, even though it's true that we do have some kind of AI bubble between the hyperscalers, is we don't have the energy to actualize these monetized values that we have on equity levels. We just do not have the energy. And until America is going to have an honest conversation conversation with itself and say, okay, if you look at the China energy market, they're over 10,000 terawatts now of energy a year. We have been flatlining around the 4,000, 4,500 mark for years. We are so stagnant. Actually, we're declining. We went from 4,500 to 4,200. So we are losing energy in a time where we need to bring it. And the problem is, I'm not going to go against the environmentalists, but a lot of people don't want the nuclear power plants. They don't want nuclear in their backyard. They still feel like that's environmentally not sound. And so if we don't get nuclear power, we don't get the monetization of AI to be realized because we do not have enough computing power. It's just that center. And you can see data centers that want to come up. We need cloud dating. We need cloud computing. And neighborhoods are saying, no, we're not going to have the data center. So we have got to get our energy policy situated. We've got to get the environmentalists on board because we can't have a stock market that just has these proposed valuations that can't be realized because we don't have the energy.
Yeah, I mean, it still hasn't stopped these sort of eye-watering capex and the numbers that these hyperscalers throw out there, even with the acknowledgement from, I think it was Jensen Huang himself, who said that China is, far ahead of us in terms of the energy rather than the AI, which, the US is slightly ahead of China on. But what do you make of this? The FT out today saying nuclear technology company Oklo has no revenues, no license to operate reactors, and no binding contracts to supply power. Yet it has been on a tear this year as investor optimism has just been, obsessed with this whole idea that, these are going to be the sorts of names that are going to power this entire AI boom with all the data centers. I mean, there has been a little bit of, I suppose, worries, concerns that this has become a pretty speculative trade.
I mean, this is where the rubber meets the road, and you are 100% right. And specifically with Oklo, the problem is they are putting out publicly available information that says we expect to be operational. We expect to have a nuclear reactor operational by 2026, 2027. So to hear that they don't have actually the even permits yet, and that this is maybe some kind of subterfuge, that is problematic because we need these things to be being built and coming online. So it is a problem, and again, I know that the fourth industrial revolution is real, Sam, and is here to stay. But if we don't have the energy, it can't be realized.
So is the market then investors putting the cart before the horse? I mean, how does one invest around that?
You have to know that it's going to be 2 steps forward, 3 steps back, 1 step forward, 2 steps back, 4 steps forward, 1 step back. It is going to be very volatile, and until we head-on address, I mean, I would look for the Trump administration to lead on this. Let's have a conversation with the American public that says, this is what your stock market values are, but if you want this to really be realizable, let's talk energy. What are we going to do to make this actually viable? Because right now, we are just keep coming up with these hyperscaler deals, and there's a new deal announced almost every day, but yet no one is talking about where is the energy coming from, except for maybe Elon Musk, and that's a problem. And maybe Jordan Wong, Jensen.
Absolutely, and only if America had half as much as your energy. Rebecca Walser, always bringing it to us here on the floor of the New York Stock Exchange. Thank you so much. That is Rebecca Walser, who is from Walser Wealth Management, the president there.